Some new changes to the mortgage underwriting that the average Contra Costa County borrower should be aware of. Good day, I'm Tony Shropshire, and this here is Rufus with the Tony and Rufus Real Estate Team right here in beautiful Antioch, California, and we are here with your Contra Costa County news update of the week. I'm going to outline some of the new loan regulations that you want to be aware of. First, the Consumer Financial Protection Bureau's ability to repay mandate. This new rule is designed to ensure that every borrower is a qualified borrower. This new rule requires all banks to establish the borrower's income, assets, and obligations, and to make sure they are eligible for the loan. This new rule will be hardest on my self-employed borrowers and my high credit score, strong asset clients, as they no longer can receive special treatment on income qualifying, as they must fit to the same debt-to-income ratios as everyone else when performing a conventional style loan. We just had a lender this last week have to buy back a $700,000 mortgage over this very rule. Actually, I think it was the first time that a lender had gotten hit since it went into effect, I believe January 10th of 2014. The lender was shocked as they didn't think they did anything wrong. What happened was the borrower did a new car loan after the lender had pulled credit. But the people enforcing this law, which our industry refers to them these days as the Gestapo, because they seem to have no rules of engagement they follow, what happened was they had ruled that the lender was still responsible. A new program has since then been launched that allows lenders to pull your credit every 24 hours when your file is in underwriting. What happens is this software, when they subscribe to it, will re-pull a 3-bureau credit report every 24 hours, and then the computer will analysis the credit report against the credit report that's being underwritten. If anything has changed with new inquiries or new debt, it automatically flags the underwriter. It's how it works. That software has gone into effect now, and it seems to be working fine at the bank level. Other issues that borrowers should be aware of is the decreasing FHA loan limits. They have now dropped to $625,000, down from $729,750. And you should also know that the points and fees lenders can charge can no longer exceed 3%. Thanks to the new rule on points and fees that went into effect on January 10th as well. And FHA has applied new rules to underwriting credit reports. For borrowers with less than perfect credit, you want to call me for more details on this and to have me look over these issues as it relates to your going forward with a new home purchase this year. With all these new rules going into effect, you're going to need to have your future real estate loans more pre-approved and screened against all these new regulatory changes. Just shoot us an email or give us a call, and you will receive stress-free performance on the process of getting you approved. I guarantee it. Meanwhile, I hope you've enjoyed this week's news update, and as always, me and Rufus appreciate your referrals, and we look forward to seeing you next week right here on your Tip of the Week.